Hello, everybody. Welcome to the free world. Today we're going to be going over the Chande Kroll stop, which is a directional trend finder that helps set up and establish stop losses for both long and short positions. It does this by using average or directional volatility to decide when is a good place to exit out of trades compared to the current market movement. Now I'm going to show you how to use it. Now, right here for the green line is where you put the stop losses for your buy orders. And then red is often a good time, if you hit it, for a stop loss for your sell orders. Now, once your price action comes above the green line, such as right here, then that is a good moment to buy. So on this trade right here, we would have bought here and then exited here for about a little bit over about 600 pips. So good investment, especially if you're using a 50% leverage. That's your time's in your money a couple times over. Of course, you don't want to trade your whole account because you might get stopped out at some point in time, and it's very dangerous to trade your whole account. And now right here, when you see it drop below the red line and the green line, that means, hey, it's time to sell. And then you'd come and you'd wait until price action crosses the red line, which means that it's hit its stop loss. So right here, for that trade, guessing about, it's about 100 pips, just about. Now there is times, like here, in this general area, where it'll be ranging. You can see several times it crosses over the red and green line. Now, with the range, when it's ranging, you could probably have the stop loss a little bit larger, or you can go with the flow and just wait. But a lot of times, if it has high volatility, you'll see the plot lines are a decent distance away from each other. And once the cross happens after that, a lot of times, if there's one high moment of volatility, it'll be right after another one. So you can see, like right here, where you could probably see a line of sideways movement coming just because of the high volatility movements that have just come. Of course, any news event will normally cause a case of high volatility. Now, this would have been an excellent trade right here. You can see where the price action crosses both the red and green lines, which is a strong sell. And it wouldn't have even told you to get out of the trade for hundreds and hundreds of pips. So that would have been an excellent, excellent trade right there. But really, the Chande Kroll stop is not too complicated, and that's really about it. And this is on a weekly chart, so it's a little bit more volatile on an hourly chart. But I'll just show you, really fast if it wants to load. But even on the hourly charts, you can really still get some good trades in. We can see like right here. Oh, we have a cyclic line. You can see right here, even though you would have got a loss on this one on the first uptick, it crosses that price action relatively fast where it drops below the red line for a decent amount. So that's also a good reason to do a stop and switch over. So you would have done a switch trade like right about here, and you still would have closed in for some pips over here and just would have recuperated those losses. Now, like I said, you do always have to worry about it going sideways, and that's kind of just a hit and miss thing. And if you're not trading more than 1% of your account per trade, you can easily double down and just kind of like use a pseudo martingale strategy. And while martingale is pretty dangerous on roulette, it's not as bad on Forex if you use it in the right way. And you can see right here, you would have got major pips just for a couple hours. You would have got about 50, a good 50 before closing out. And then you would have even got right here as well. And you would have got a lot of pips on this movement. This would have been a good 80 pip movement up before it got lost. So you get major pips on the Chande Kroll stop, and it's actually one of my favorite indicators just because it's so simple to use, and it's really not complicated. It's really not a complicated indicator. It's very simple. It helps you with stop losses if you're using them, or even if you're using different leverages accounts, or if you are changing your open positions to reflect how your money's moving. If you're using larger account sizes, you can't really do that with smaller account sizes, but you can do it with larger account sizes. But anyways, if you enjoyed this video, please give it a like, subscribe to my channel, and like I said, use some of my links below. It does help my channel out a lot, and check out some more of my videos.